What's going on, everyone? 60% of the S&P 500 closed down in the red today, but even with that, the SPY is still kissing its recent highs right around $598, and it's only a few dollars away from that long-awaited $600 level. We're set for some pretty big moves and good opportunities throughout the rest of this week, and we have a lot of exciting stuff to talk about today, so definitely make sure to stick with us all the way until the end. But Tom, let's not waste any time and let's get right to it.
Yeah, the SPY tried to break out above yesterday's high of day, right around 597, and it was able to break, but as we can see, not by much, and it ended up slowing down a lot around 598, which was the next resistance I was watching, but everybody's waiting for $600, and the SPY went really flat today, and as we can see early on in pre-market, there was a pretty big red candle where the SPY extended back down to around 595.50, and that ended up being the lower support where SPY bounced multiple times today, and what happened was there was actually ADP employment data that came out that actually came in at 37,000 versus 115,000 on the consensus there. So that was pretty crazy to see. Definitely missed the consensus by a lot, and the market did not like that as it showed the jobs data was a little bit worse. So that's why the market sold off there, and it actually even sparked a truth post out of Trump where Trump said the ADP numbers are out and too late, Powell must now lower the rates. He's unbelievable. Europe has lowered 9 times. So Trump's out here applying pressure to Powell with some of these negative job numbers. And I know everybody's waiting for the job numbers coming out on Friday of this week, 1 hour before the market opens with the non-farm payrolls and the unemployment rate. But overall, Mike, very slow and choppy day with the SPY as we had all this mixed data coming out today.
Yeah, get your popcorn ready because we're set for some pretty exciting things over these next few weeks. Like you said, we had some pretty rough jobs data this morning, and it was actually the lowest monthly job total from the ADP since March of 2023. And Trump basically was yelling at Powell to turn those money printers back on. But Jerome Powell's pretty hesitant right now because a lot of people are looking at what's going to happen with this so-called big, beautiful bill that is everywhere in the news nowadays. And basically what's happening is Trump is trying to pass this bill, and he wants to cut taxes by around $3.7 trillion. But the downside is that this bill is set to add like 2.4 to like $3.5 trillion to the deficit, and potentially even a lot more depending on how much you figure interest costs will rise by. And basically this is important and worth paying attention to because if we look at the bond market, we can see that people are already losing confidence in our bonds because they're getting a little bit worried that we might not be able to pay all of this debt that we have and we are continuously taking on more of back. And basically that is why we are seeing interest rates rise because people are selling out of these things. And the stock market has still been holding up pretty well during this time, and one of the main reasons for that is because we have been seeing the economy hold up fine so far at least. So basically why you could say Friday and jobs reports like we have seen over the past few days are going to be so important is because they give us like little insights as to how the economy is doing and if the economy is like if it's still growing or if it's like slowly deteriorating and we just can't see it yet. So yeah, Friday 1 hour before market open will be very important. We're going to have some crucial jobs data set to release.
Yeah, and I feel like everybody right now is just very pessimistic about the economy, and whether we're looking at unemployment or we're looking at anything out there, we're starting to see people get very worried that the tariff situation is going to start looming on the overall economy. We have a pretty good chart here just showing consumers anticipating the risk of this with the unemployment, of course. I know that we've talked a lot about consumers looking at inflation going up a lot recently as well. Like the 1-year inflation expectation is really mind-blowing too, how high that's been getting. So there's definitely a lot of worry out there, I would say. And I know that the overall market, like you said, has been holding up great, but everybody's looking at the jobs numbers and they're saying, okay, if these end up coming in, it shows the jobs numbers are rough. That could be something where we might end up seeing like an SPX 6,000 rejection or a SPY $600 rejection. And that could be something where we see a pullback here in the short term. And I don't think a pullback would necessarily be that unwarranted either, considering how high the market is. But I will say, I think that there's also value going back and looking at what happened the last time non-farm payrolls and the unemployment rate ended up coming out, because it actually happened on May 2nd. And if we go to the SPY and we go back to May 2nd, we can see that that it was actually a pretty good green day that day. And if we go to like an intraday chart and we scroll back to May 2nd, of course, we can tell that the SPY had gapped up pretty well that day, and there was a lot of green bullish price action there. It really beat the expectation. The expectation was actually very close to what it is now, right around 130,000, and it came in at 177,000 and really surprised the market. So if it surprises the market again, we could see some green bullish action here, but I don't know. I'm getting worried that we're going to start seeing see the jobs numbers fall a little bit.
Yeah, we'll see what happens. And let's go back to that chart that you just showed in terms of what U.S. consumers are expecting in terms of unemployment. Is basically what we're seeing here is around 66% of U.S. consumers expecting unemployment over the next 12 months to rise, which is actually the highest share of U.S. consumers saying this since 2008. So that's kind of scary by itself. But also this percentage has nearly doubled just over the past 4 months, which was actually faster than the increase that we saw in 2008. So basically people are worried, but we're going to see what actually ends up happening by looking at the data. And I will say though, Tom, like you pointed out, when we looked at the last reading of the non-farm payrolls data, which is the important data that we're set to have on Friday, it came in really good and honestly really good. So, we'll see what happens. Pay attention though over these next few days because the market will move a lot based off this. But like we've been saying, the market is also set to move a lot based off of how this trade war situation develops with China. So basically, Trump came out today and he said that China is extremely hard to make a deal with, and obviously that is not necessarily a hopeful sign to see. And another thing that's worth keeping in mind is that, Trump and the Chinese president, Xi Jinping, are supposed to have a phone call this week. It has not happened so far, and the rumor is that it was going to happen on Friday, but nothing has been confirmed yet.
Yeah, it seems like everything is up in the air with China right now, and tariffs are definitely something that I am worried about, so I can't wait to hear if they can get a talk going. But I was not expecting Trump to say this on social media today about the president of China being so hard to deal with, and I thought Trump would play hardball just a little bit more there, but we'll have to see if something can get going here. But with tariffs, something that's rough is what companies are going to do with these higher costs related to the tariffs. Like, are they going to pass those off to consumers? How are they going to deal with those? And it looks like most companies are already raising prices because of this and kind of passing it off to the consumers here. And we can see that there's some charts here that are very interesting. And in May, about 77% of service firms saw increased costs due to tariffs, and most of them started passing off these costs, of course. We can see that the share of U.S. businesses passing off some or all of these tariffs increased quite a bit. We can see here that with manufacturers and service firms, 31% and 45% individually are passing off all of the tariffs, which is pretty insane. We can see some aren't passing off like any of the tariffs, but there's a pretty striking, there's a pretty high number of companies that are passing these off though. So that's something that will impact the economy in a pretty rough way, in my opinion. If we do see prices increase because of this, that would be something that hurts consumers quite a bit.
Yeah, and it would also increase inflation, of course, and just put more pressure on the economy. So I think Trump is definitely looking to make a deal with China here soon, which is, why this call is going to be so important. So keep this unscheduled event in the back of your mind over these next few trading days. As we already know, any China trade war updates significantly move the market. So definitely pay attention to this. But while we have all of this tariff and jobs data going on right now, we are still seeing a bunch of money just trucking into safe haven assets like gold and silver. They didn't move too crazy today, but they are seeing just so much money flow into them, and they've been crushing it and just outperforming the market as a whole, especially gold. And I saw some interesting data today that basically shows that if you look at the ratio between silver and gold, silver is at one of its lowest points that it normally gets to in its broader sense in comparison with gold. So there are multiple ways to interpret this. Number one, this is a ratio. So, of course, silver can rise or gold can fall, or, of course, they can both rise and silver just outpaces it for this ratio to get back into normal. Or, of course, they could both fall and silver can just hold up in a better way. Either way, when you look at the gold and silver situation, silver is at a point right now where it is certainly seeming at a relative low compared to gold, and at the same time we are seeing a lot of money flow into safe haven assets. Personally, I would like to see silver. I would like to see both gold and silver rise, but for silver to truly lead the way, especially considering the handful of big money plays that we saw with silver recently as well. But definitely keep silver close on the radar. There's a lot of things pointing at this in a bullish way, and we're getting very close to that breakout, right around like $32 per share, Tom.
We've been waiting for that for so long, and it's actually so close right now. We just need one real catalyst to get silver pumping up through this resistance, and who knows, it might come with the jobs data this week. It might come with a bad call from President Xi. I don't know. We'll have to see what ends up playing out here. But nonetheless, I'm definitely watching silver a lot too. And that big money play is on fire from May 22nd. That was a pretty good snipe by the big money there on that little dip by SLV. And of course, right before that huge gap up recently. So pretty funny there. $3.5 million. I know a lot of people have been loving that. And I personally, Mike, have been loving the gold mining stocks like GDX, for example, and even other ones like NEM and AEM. They've been moving very well. Also, I know it's not necessarily silver, but it's kind of in that industry.
Beautiful. And I know we talked so much about the economic schedule over the next few days, but how is the earnings schedule looking?
Earnings is actually pretty awesome. So for tomorrow, it's going to be the biggest earnings day of the week. So be ready for that in after hours. Avgo will be reporting. Everybody's been watching Avgo this week. It's been going pretty nuts, actually. If we look at AVGO on the daily chart, it has been a rocket ship. It's straight to the upside. New all-time highs actually posted this week as well. So watch Broadcom very closely with their earnings. They have a lot on their plate to keep this going, and then DocuSign and Lulu will be reporting as well.
Awesome. So we'll definitely keep those close on watch, but also looking at SPY for tomorrow. It's so close to this key $600 level. What are the key points you're seeing in the short term, and what are you seeing on the charts?
Yeah, of course, tomorrow we have to watch 598. That's where the SPY had like a triple, quadruple top today. I don't know how close you want to count some of these touches here, but definitely contended with 598 quite a bit. So if we're able to break that, watch for $600 to the upside. I think $600 would be an amazing target, of course, over the next couple trading days and even tomorrow in general. I am a little bit worried about a possible rejection at 600. If that does come into play, there are some big supports in the short term down around 592 to 593, and then 590 to 591 would be the main ones that I watch for in the event of a pullback. But I noticed the SPY was pretty much stuck in a range today. For tomorrow, it's pretty much like, okay, are we going to be able to get a good move up and out of this range, or down and out of this range, or are we going to have to wait for that jobs data on Friday? I do not want to see the SPY get stuck within here. I definitely want to see a good directional move, either up out of here or down out of this range.
Yeah, and stay adaptable. As we know, there are a lot of big news events happening right now, and a lot of them are completely unpredictable, just like this Trump-Xi call. But we do know there will be big moves from them, so of course, stay adaptable. I know the market has been crushing it, and we like to give these warnings because sometimes people get too caught up in the bull wave, and then when it slows down, they get caught with their pants down. So here's your warning: protect yourself now. We should see some pretty big moves over the short term. But besides that, Tom, let's jump right into some setups and predictions. A stock that is close on watch is FSLR, and it is to the upside. So there was a recent big money trade with this one. It was a $1.1 million big money play that we covered just the other week. FSLR has been doing pretty well over the past few days. And looking at this situation here, we actually just saw a big money play with Run yesterday, and we have another interesting big money play today. Either way, we're seeing a lot of money flow into the solar industry, and there's also a real catalyst at hand as well, as there is some rising speculation that we might see, you could say, some pushback with this big, beautiful bill in terms of how it is kind of limiting some of these clean energy credits, which is heavily relied on in the solar industry. Either way, we're seeing some good flows here. The price action today was pretty good as well, and it's definitely on my bullish radar over these next few trading days. It's holding support pretty well at the 152 area. I wouldn't be surprised if we could see a test of like 173 to like 174 over the next week or so if it develops momentum. But again, we need to see real momentum here. If the stock just fizzles out over the next few trading days, then, the opportunity will diminish quite a bit.
Yeah, whenever you zoom out on this, you can kind of see a pretty good base starting to form on FSLR, so I'll definitely be keeping it on the radar as well, Mike. With my first setup, I'm looking at CoreWeave, everybody's favorite stock in the short term. It went up again today, another 8.3%. Now, I will say it was a lot slower than it was the past few trading days. We can see this morning it actually went pretty flat and chopped around with the SPY for a long time, but I thought that end-of-day close and move was actually pretty fantastic. So if we can keep above 160 and hold this as key support tomorrow and get a good breakout above 166.50, I'll be watching for CoreWeave for another good move. It's still in play. I know it didn't go up 50% in one day like it did a couple days ago, but it definitely had one hell of a move nonetheless.
The show goes on. Yeah, definitely keep this one close on watch. Another ticker that is definitely on the radar is CrowdStrike, CRWD, similar ticker symbol. But basically, this stock fell a decent amount on earnings today. It fell around 6%. It held up very well from open, but it's definitely on my bearish radar for a potential earnings continuation. But I want to see it break below this like $450 area. If we do see that, I think it can definitely bleed and have a big move. But again, I want to see this break. I want to see a momentum-driven move. If it just chops around and just barely breaks through 450, that is a completely different situation, as if it just like drills right through it and it moves down with like, real movement and power. As we've seen in the past, like on the daily chart of CrowdStrike, we can see that not only does it have, some great big up moves, but when it does go in these downtrends, it can last for like multiple days to weeks at a time, and the moves are pretty sizable. So either way, CRWD is definitely on my bearish radar.
Yeah, that was a pretty big gap down today. If this is the start of a real downtrend for them, CrowdStrike could end up being a pretty good put opportunity for the next couple weeks, even maybe for the next month or so. So I'll keep it on the radar as well. With my next setup, I'm looking at APLD, Applied Digital. APLD, we all know they had that big news the other day with CoreWeave, and they are still popping off. I have CRWV and Applied, both of my plays today, but they're both in play in the short term. If APLD can break above 1350, watch them to the upside. They closed up around 30% today, which was another great move. We can see over the past few trading days since that CoreWeave announcement, they've had some great movement. They did go flat on Tuesday, but today they came right back and we're right back on the top of the watch list. So I'll be watching Applied very closely. There's a lot of volume here. The main thing with this one is following the money and following the momentum. Do not get stuck when this one turns around because, it's one of those stocks that if we go back, we look on the daily chart, it's kind of like CrowdStrike, Mike. Like it can have some pretty bad downtrends sometimes too.
Yeah, today's breakout was awesome, though, and like you said, it popped up by around 30%, so there's some serious momentum there, and it will definitely be on my radar as well. But besides that, Tom, I think we are golden for today's momentum plays. And with the first one, we have nuclear fuels, ticker symbol, or energy fuels, ticker symbol UUUU.
Yeah, if they can break out above $5.80, keep watching them to the upside. There's been some positive news recently with these stocks, and it closed today right around a key resistance.
Awesome. All right, with the next one, we have Navitas Semiconductor, ticker symbol NVTS, also to the upside.
Yeah, stock that had a deal with NVIDIA recently, and it's right around a $7 resistance. So if they can break $7, watch them up. That's a pretty big psychological level, too.
All right, and then with the last one, we have Caesars, ticker symbol CZR, to the downside.
Yeah, pretty rough drop here in the short term. If Caesars can break under this low of from yesterday, actually, right around 25.70, there's a good double bottom there, then watch Caesars down as well.
All right, so we have these three tickers on the radar for potential continuations tomorrow, if and only if they break through the levels listed. As always, use stop losses to protect yourself. And besides that, it is now about that time to jump into today's $660,000 big money trade. And we are looking at none other Then Run, again, same ticker as yesterday, ticker symbol RUN. Today, the big money trader bought the 10 strike call options that expire on July 3rd of 2025. For my advanced traders out there, this is technically a call debit spread where they also shorted the 15 strike call options. Essentially, they are risking around $660,000 to make around $4.34 million, and they want this stock to go up. RUN has been doing pretty well over the past few days, and I'm very excited to see how this one does, considering 2 back-to-back big money trades. They're both spreads, and there's been a lot of money flowing into just the solar industry in general, and there's real news to back it up.
100%. RUN is so interesting. Back-to-back big money plays. That's pretty rare. Not sure that we've ever even had that before, but a big gap down here a couple weeks ago as the big beautiful bill was getting rid of some of those tax credits for some of these clean energy companies. It looks like those might be edited. I know that we've talked about that quite a bit recently, and RUN has been moving to the upside pretty well down here. Ever since that gap down, we'll say. In the ultra short term, today was pretty rough. You know, it pulled back, but it wasn't really that bad in the grand scheme of things. If it starts to rip above this short-term resistance around $8.40, these big money plays will start doing pretty good. So I like it, Mike, and it's actually a really short-term play as well, expiring July 3rd, a little bit shorter term even than the play from yesterday. So they must be pretty confident in this one.
Yeah, definitely keep this one close on the radar. It should be pretty exciting over the next few weeks. And if you guys are new to the channel, definitely consider subscribing so you can get our videos recommended to you more often. We post brand new videos all the time covering the most important news, information, big money trades, key events, earnings, and basically everything you have to know for the stock market every single day. And if you subscribe, you'll get our videos recommended to you more often. But we also want to give a giant shout out to today's member of the day, Anarchist Wolf, who had a pretty good day, and he showed a lot of improvement as well. So huge shout out to you, even with that recent short-term adversity. Looks like you're focusing on the right things, so keep working hard and keep on improving, and shout out with all of today's profits. And if you guys are into short-term trading, definitely check out that first link in the description and the comments down below to get in on the action. Today's Surge Bot definitely crushed it with 350% gains with APLD call options, 117% gains with ASTS call options, and the list goes on and on. But I would actually say it was a better day in the pullbacks channel, as our hybrid bot truly hit it out of the park with ASTS call options that moved up by 545%. Of course, there were a handful of other plays as well, so definitely check out the link down below to get access to the trading floor, which is daily plays, big money plays, weekly live events, which is tonight as well, a great community of short-term traders, and basically everything you can need to crush it in this market. Coupon code Big Money is still active, so check that out in the description and the comments down below. But besides that, thank you all so much for watching, and let's crush it in the market tomorrow.